Do the economic cycles, Lakshman, that you look at, do they justify a third leg of a bull market?
Short term, sure. And so cyclical is looking at a couple of quarters. It's not looking out forever.
Yeah, that's
structurally, plenty of things to think about and to give you pause in the way things are going. But cyclically, I think we don't want to miss the forest for the trees. We were in the boonies, right? We had a really bad global industrial downturn.
We had a pandemic and all that.
But even after that, it still kept going. It was hitting Europe. It was hitting China. Remember, the beginning of 23, everybody thought China was going to come out. The global industrial upturn was going to be here. Yada, yada, yada. Never happened. Now, at the end of 2023, our global industrial stuff, really, the forward-looking stuff, started lifting nicely. And that's a nice backdrop for Europe. It's a nice backdrop for China. It's a nice backdrop for goods demand. And I hear all of the happy talk around inflation. Okay, the rent stuff is not right. The insurance stuff is not right. It's going to come down. Everybody presumes that goods inflation is no problem. And what we're seeing is if global industrial growth is turning up, and it is, that puts a bid on goods.
Paul, the chart here, we can't show it on radio. It doesn't. We can show it on YouTube, but it doesn't work on radio. Lakshman has a chart of the 5-year ahead GDP forecast. And the only thing moving up is India in the United States, Paul. Everything else is stable. Japan's resilient, But it's this U.S. exceptionalism.
That's where I wanted to go,
Wait a minute, Paul, he's breaking a rule.
I know,
he's coming in here with highlighted research notes.
They're very simple.
Can you explain to him?
Yeah, the lines are moving.
Paul, put that up in front of the camera for YouTube.
Yes,
we don't allow this, okay? Pink highlighters don't work. They're banned.
That works.
Continue.
So, about that U.S. exceptionalism, how unusual is that for the U.S. economy to generally be doing well, 3-4%, whatever it is, versus Europe, particularly Germany, and then China? How is that unusual to have that decoupling, if you will?
Well, certainly over the last couple decades it is. This is the breakdown in China is off the charts, and you can see that with the pink highlights. Germany doesn't look good. It's the sick man of Europe again. U.S. is up and India is up. Now, U.S. is up. I think part of it, we have to look at the excess spending. I mean, that's a lot of money we pushed out over the last couple of years. And that may be influencing some things. And certainly India, you know the story. They've got some population growth, and they have an opportunity to do investment for other productivity-enhancing things. And so that's helping India. Everybody else is kind of in trouble on population growth. And the productivity growth is... a big question mark. It's not a given.
What do you tell your clients these days about China? I hear everything from uninvestable, which is kind of where I am, to you can't ignore it, you got to be there. How do you guys think about it?
Well, structurally, you've got a problem. Ideologically, I'm not so sure, right? You don't want someone making an edict and taking your money away. So those are real big risk factors. Cyclically, green light. Since the end of last year, cyclically, it's been a green light. You have this global industrial growth upturn. About 20% of the Chinese economy gears off of exports, which are gearing. Those are gearing now.